Welcome back to Lab 8.6, Disposal of Assets. Here we have three different kinds of assets: automobiles, equipment, and building, and three different methods of depreciation, one for each of them. We disposed of the assets listed here, and the information about the disposal is listed in this paragraph, the second paragraph. We're supposed to prepare journal entries for bringing the depreciation up to the date of the sale, and then record the sale for all three of the different kinds of assets. There's information here about the remaining useful life on the automobiles, the total useful life on the equipment, because the remaining useful life would not really help because we're using a declining balance method, and then finally the remaining useful life on the building. So first step, we need to figure out the amount of depreciation on the automobiles. So the automobiles were sold on September the 2nd, and so we need depreciation on the automobiles, which is right there, and accumulated depreciation also on the automobiles. And the amount of the depreciation, since we're using the units of production method, we take the 162,600 minus the accumulated depreciation 94,000, and the residual amount is 19,000. So we can't depreciate below that amount, and we divide that by the 124,000 kilometers remaining, and then we get the information in transaction A here. The automobiles had the automobiles depreciation for the automobiles. It had been driven, so presumably there are more than one, but anyway. The automobiles had been driven 40,000 kilometers from January the 1st, so we need to multiply that rate by 40,000 to get 16,000 as the amount of depreciation. Carry that down there, and note that is transaction A. The determination of the gain or loss on sale is exactly the same date. We are going to receive cash. We have some accumulated depreciation we need to reverse. We have automobiles. Whoops. I guess I need more. I need 4 lines for that. There we go. We have 4 lines. And transaction B. We need to reduce the automobiles to 0. And then we need to record the gain or loss. And I guess we can't do that until we know whether it is a gain or loss. So the amount of cash we got was 59,700. The accumulated depreciation is going to be the accumulated depreciation at the start of the year, 94,000, plus the 16,000 we calculated in transaction A. The amount of the automobiles, the cost of the automobiles needs to go away, 160,600. So that needs to be wiped off the books entirely because we no longer have the automobiles. And if we compare the total of these two, that's 110 plus 60-ish, would be about 170. So in order to make the transaction balance, we're going to have to put a number over here, and that is a credit. And it's either a loss or a gain. A gain would increase equity, a loss would decrease equity. So clearly if we're recording it as a credit here, we're increasing equity because a credit increases the equity amount, and so that's going to be a gain. So the amount of the gain is going to be the 59,700 plus the 110,000 minus the 162,600 on the credit side. So that will balance the two. And so since that is on that side, we're going to put it in as a gain on sale or disposal. Okay, so we're going to do that same 2 transactions now for the July 1st sale of the equipment. Transaction C and D. And once again, we'll need 4 lines in our transaction D journal entry. So once again, we need to update the depreciation to the current situation as of the 1st of July, halfway through the year. So we have depreciation expense on equipment. There we go. Accumulated depreciation on the equipment. There. Oops. Too quick. Okay. And then we need to figure out the amount of the depreciation expense this year. So we have a cost of 85,000. Minus the 67,000 of accumulated depreciation. So that would be the net book value. We multiply that by 2 over n, n being the number of years of life. And so that would be the amount of depreciation if we depreciate it for the entire year. But we don't have it for the whole year. We only have it from January 1st to July the 1st, which is 6 months out of 12 months. Whoops, I have to do multiplication. Times 6 over 12 works out to 3,600. Okay, so once again, we have cash, we have accumulated depreciation, we'll have equipment, and we'll have the gain or loss, which we will determine in a minute. We got 5,800 for the equipment. Accumulated depreciation would be the 67,000 of depreciation, accumulated depreciation at the start of the year, plus the 3,600 we added as part of transaction C. And the equipment cost needs to go away. That was 85,000. So now if we compare the two, the balancing entry would obviously have to be a debit, because 76,400 is not less than 85,000. So the amount of the loss in this case is going to be 85,000 minus the 70,600 for depreciation minus the 5,800 in cash, and that will be a loss on disposal. Once again, it's a debit. Debit reduces equity, so therefore it's a loss. Finally, we have a building which we sold on the 6th of May. And so the building needs to be depreciated to the beginning of May. There we go. Okay, so the information in the paragraph says the useful life, remaining estimated useful life in the building, so that's from now forward. The remaining estimated useful life of the building is 5 years, residual value is 10,000, using the straight line method. So we have a cost of 138,400 minus the residual, or the accumulated depreciation of 84,000 minus the residual value of 10,000. So that's how much we have to depreciate, and we need to do that over 5 years. So the annual amount would be 8880, but we sold it on May the 6th, so January, February, March, April. 4 months have gone by. So go to the end and multiply that by 4 out of 12, 2960 is the amount of depreciation we need to record this year. And that is transaction E. Transaction F is the last one, and we need 4 lines for that, just like all the ones above. We're going to get cash, accumulated depreciation on the building. The building is going to go away, and we have a gain or loss depending on what the numbers turn out to be. The amount of cash was 51,440 according to the information in the second paragraph. The accumulated depreciation would be 84,000 at the beginning. Whoops, where did I go here? 84,000 plus the 2960 that we added in transaction E. The building cost needs to go down to 0. And then if we add those together, we have 138 or so. We can just check that. Let's just do the math in the cell. 138,400. We actually didn't lose or gain anything on this one. So that's kind of perfect. So we need to get rid of that, because and we can delete that. Okay, so in that case, there's no gain or loss, which is kind of ironic, interesting. So let's see what lyrics thought of all of that. Lyrics liked it all, so therefore we're done.